As I said, time now for the markets with Leighton. And Leighton, soybean ending stocks reduced by the USDA. What about the market's reaction?
Well, we're going to talk a little bit about that in our segment here coming up. Also this week, catfish processing is down. U.S. beef exports are reported to be solid, while uncertainty remains about new crop corn. The monthly snapshot of how the farm-raised catfish industry is doing was released Wednesday afternoon, July 20th. The story continues to be fewer fish and higher prices. The average pond bank price being paid to U.S. producers in June was $1.23 per pound. That is 44 cents per pound higher than it was 1 year ago. Farm sales totaled over 24 million pounds round weight, a decrease of 37% from June 2010. Processor sales were almost 12.5 million pounds. That is down 35% from a year ago. Analysts say feedlots are seeing more incoming cattle due to poor pasture conditions in especially the western areas of the country. The CME Group is reporting that it wouldn't be a surprise to see placements top year-ago levels and to see feedlot inventories above year-ago levels as well. Reports indicate that even some spring calves are winding up in feedlots now. Analysts believe these developments could mean higher fed cattle numbers through the end of this year. Well, most traders are of the opinion that solid beef exports have helped to shore up boxed beef prices this season. Analyst Alan Brugler tells Market to Market that although product demand domestically could soften, the price moves of late have been favorable.
And that's a combination of supply and also demand, and the consumption at least. Export market is really the key there. We continue to make export sales of 13,000, 14,000, 15,000 tons a month. That's meat that we don't have to move into the U.S. market.
Right.
U.S. market got a little nervous here because of the unemployment data floating around here. But again, the export market has been so solid that it's allowed us to keep those box beef prices up. The packers been able to pay up for the cattle. And of course, the futures are going to reflect that.
We have our trivia quiz next on Farm Week. When did the United States have the fewest number of cotton gins? Was it 1991, 2002, 2009, or 2010? You'll find out the right answer here in a few more minutes. The summer market for corn and soybeans is the focus of this week's market interview. Besides monitoring price trends, Extension Ag economist John Michael Riley has been looking over the recent July crop and supply demand numbers for these commodities. I talked to him Wednesday afternoon, July 20th. John Michael, let's begin with corn, and I understand ending stocks for both old and new crop were increased.
That's correct. The increase largely reflected the higher acreage number that was reported in the June acreage report from USDA, and that bumped the total production in the U.S. It bumped, it kind of fed through and increased ending stocks. However, that number was lower than the pre-report estimate. The pre-report was looking for right at 1 billion bushels of ending stocks, and USDA reported 870 million last week. So a bit of a shock there. It did provide some positive information for the market. But again, yeah, they were bumped versus the previous month's ag supply and demand report because of that higher acreage number.
But I would imagine there's still considerable doubt about what final production will look like time we get to harvest this fall.
Still a tremendous amount of uncertainties. The crop is still behind schedule. The crop looks good according to condition reports, but behind schedule. And for the most part, there's a lot of hot weather out there that could be pushing yields down.
All right, let's talk about soybeans a little bit. What did the report have to say as far as soybeans?
Again, we actually reduced the ending stocks number for the current growing season crop right at 190 million bushels ending stocks. Not a whole lot of changes there in the acreage number from June, but again, not a whole lot of surprises there for soybeans as well. But again, the market kind of has reacted as corn has for the most part. They've kind of followed one another. No big real surprises though in regard to soybeans.
Are we likely to be on the edge of our seats a little bit with soybeans as we get towards harvest in a few more months?
We will, as with all the crops. Soybeans are behind schedule, just like corn across most of the Midwest and even here in Mississippi. So there is a lot of uncertainty as to what these final yields are going to be. I think we have a better handle on that soybean acreage versus corn, but there is a lot of uncertainty about what those final yields are going to be.
And I guess, again, the next report in August, we may see some changes that are unexpected.
They're resurveying a couple of states due to some flooding for acreage numbers, and that's going to be reflected in the August report. We're also going to start getting some objective yield data back, which will move from trend line, and it will actually be data coming in from the field. So that August report is one that we're really going to look heavily to.
That August report will be released on Thursday morning the 11th, just in time for Farm Week production. Well, let's give you the trivia answer now. The all-time low for the number of U.S. cotton gins came 2 years ago in 2009. The number dipped to 680. On a more positive note, cottonfarming.com reports gin numbers are rebounding now.